Hello everybody, my name is Mark and it was kind of a big day for me. I did some rebalancing of my money, my options, and did a little bit of restructuring. And again, my videos are different than other people's videos because I talk about my own money in my real account. This is not paper trading. So here's what I did today, kind of a big day. Let's go to my transactions here. And here you go. Today is July the 6th. 2017, and I did four things there. You can see all four July the 6th. And so first thing I did was I bought back my call options, okay, and I bought them back at $54 a contract. So that was $226 that I spent, and the reason I did that is because earnings is coming up, and if Bank of America goes up, if there's a good earnings report, then I don't want to have shorted call options at that low of a price. The price would have been $25, and that's the decision that I finally came to. I wanted to open that up for me to make a little bit more money, so that's why I bought those. And then the next thing I did was I bought some put options, and I want to show you something about what Bank of America did today. So I'm going to pull up the chart, and this is just for one day, okay? Here is the one-day chart. So today is July the 6th, 2017, and again it opened kind of low here, and then it went up, and it went all the way up to $25. I think the high was like $25.11. And Bank of America was right around there when I did that. Let me look and see when exactly I made that transaction. So it looks like it was at 9:39. So about right when the market opened, maybe a few minutes after. Okay, this is Pacific Standard Time and not Eastern. And market opened 6:30 Eastern Time, and I'm on the Pacific. And so I did that right after the market opened, and so I wanted to buy back my call options. Let me go back to my transactions here, and so I bought back those call options at $54, spent $226. Okay, so that's the first thing I did. And again, the reason I did that is because I don't want to have call options shorted at that $25 strike price when Bank of America is already very near the $25 strike, since Bank of America seems to keep wanting to go up and away, right? Even if it's going up slowly, if I have shorted call options, then I would be on the day of expiration, and those previous call options expired on July 21st. That's about 2 weeks from now, and so I decided that I wanted to get out of that position, and so I was willing to spend the money and get out of that position because I don't want to sell out of Bank of America. It would have been perfectly fine for me not to do that and just hang on and get the max profit, but I want to try to make a little more. So that's the first thing I did, was I bought the call options back. Then the next thing I did was I bought 4 more put options right here. Same strike price, but longer time frame. These ones don't expire until 2019 January 18th. That's a year and a half from now. When I buy stock options, I like to buy long term. When I sell stock options, I like to sell short terms. Okay, and again, it's just a building up. It's a building onto my option caller strategy. So now instead of 4 put options, I have 8 put option contracts. And let me go to my account and show you what those look like. So these are the ones that I bought today. So here you go. They're good all the way till January 18, 2019, $22 strike price. And then the other one, the other 4 put options, I still own those ones. Let me go back to my account here, and I believe these are them right here. Here they are. Okay, so these are the 4 that I've been owning for the last couple of months, and these expire in June 15, 2018. That's still a year from now, almost. $22 strike price, and so I got those. So now I have a total of, let me go back to my account here, I have a total of 8 put options, okay? And so that's the next thing I did, just to kind of build on my option collar strategy. And then the next thing I did was I sold 4 put options, and I sold it at the $21 strike price, and I got $23 a contract. So minus the commission, I made $81.96. That is good until October 20th, 2017. And then the next thing I did was I sold 4 call options, and these ones I did at the $28 strike price. That's a much better profit for me. I would be super duper happy if Bank of America went to $28. I would make even more money, and I got $36 premium for a total of $133.96. $133.96, that's $134 rounded up, plus $81.96. Let's round it down to 80. So 134 plus 80 would be, let's see, 130 plus 80 would be 210. So a little under 210. So we'll say around 210, 214, about $215. That's what I get. And that's just premium. That doesn't even count if Bank of America goes up or down. Now, here is the wondrous thing about my new position here. If, let's say, Bank of America decides to start going back down, and maybe it'll do that. Let's pull up this chart and let's take a quick reminder look of what this looks like here. That's a 6 month. Let's go out to a longer chart so it's better visual. Here's a 3-year chart. That's too long. Let's go to a 1-year chart. There we go. 1-year chart. Okay. Here's what this was in November, and then Donald Trump got elected, and then Bank of America's just kind of been trading in that range. It's been up high up here, and it's been down low here. And so that's the reason for my current position. My current position is a kind of a neutral to bullish strategy, okay? And if you look at my account, you see there are some red numbers there. That's going to happen every single time that you buy and sell stock options. And there's 2 reasons for that. Reason number 1 is you pay money in commissions. And so that money gets subtracted. And there's no way around that. It's just like when you own a business. That's just part of your business expenses. And the other reason is what I call slippage. And that's a real term, slippage. One of the things to know about stocks and also options is that it's not like going to the grocery store where everything is a set price. It's more like going to an auction, and there's a bid and there's an ask price. So like with this put option here, the bid is, keeps doing that. Well, here's the bid, and there's the ask. Okay, you can see the bid is $204 and the ask is $215. Now TD Ameritrade will automatically calculate the lowest price. So it's telling me that the bid is at, it's telling me that the price of the put option is the same as the bid. Okay, and so that slippage, that is a 9 and 11 cent slippage. Okay, and generally you want as small or as close together as possible. You don't want super wide spreads there. You want it as close together as possible. That has to do with volume and liquidity. It's kind of like if you want to buy a baseball card. Let's say you own a baseball card and the baseball card's worth $100,000. It's a Mickey Mantle rookie or something. Or let's say it's worth $10,000, you know. But if you can't find anybody who wants to buy baseball cards because nobody collects baseball cards, then you're just going to get stuck with the $10,000 baseball card. And that's the way it is with stocks and call options and put options, okay? When you have low volume and there's no buyers and sellers out there, then you can get kind of a larger spread like that. And this particular put option has a little bit lower liquidity. It's not that bad, but it's a little bit lower than the other options. Okay, go back to my account here and hold on here. I know what I need to do. Okay, going back to my account here, going back to Bank of America. Now, if I go to, like, let's say some of the shorter term options. Okay, let me centralize this here. There, centralize that. If I go, let's say, to the shorter term options, like let's say these 15-day ones. Now notice this $23 put option. See how it's only 14 is the bid, and 15 and 25 and 26. So these options are more popular, and that tends to happen as it gets closer and closer to expiration. Stock options, let me get this thing out of the way. Stock options tend to get more popular because people need to either get in or get out of their positions more than if there's a whole 2 years. And this particular put option is 22. You can see that's my 9-cent spread, and all of those have a little bit larger of a spread. Look at this one. This one is a $15 spread. This one is a $20 spread. See, so there is a problem when you go longer term out, but you get what you pay for, and I'm willing to give up a little bit of money for that little gap there between the bid and the ask. So anyways, back to my transactions here and back to what I done. So now my current position is that, last thing I did was I sold 4 more call options. And I think I mentioned that earlier. $28 strike price, $133, so $215. Okay, so that's my position. I did a lot today. Haven't done anything on GDX yet. GDX, I'm fine just holding on to that. But Bank of America, I did a lot because Bank of America, again, let me pull up the day chart. It got very close to my max profit level. And let me go to the summary here. And here's the range right here. It had a high of 25.11, and when I did all that, it was near that level. So I wanted to do that. I wanted to get out of that position, and I wanted to open up a brand new position. So now I have a brand new position. My position is completely different. And the thing that I really like about stock options is that whatever it is you believe about your stock or about the stock market or whatever, there is a way that you can invest your money so that it matches your belief. Now, my belief about Bank of America here is that Bank of America is going to continue to go up, but I have kind of a neutral strategy and a bullish strategy. So it is kind of the way that I have bought and sold my options says that I will make the most money if Bank of America continues to go up. Okay, if it goes down, I will take temporary losses, but eventually the losses will equalize. As you can see right here in my transaction, I'm taking in over $200 in premium. Okay, so eventually what I lose here on the options that I bought will eventually be overcome by all the money that I'm going to make in these premiums, because after October, remember, those put options that I bought are good all the way till 2019, and the other put options are good till June. So I have all that time that I can continue to sell options and continue to make back the money that I spent. So the option caller strategy to me is an unbeatable strategy. You can buy any stock you want that has a good selection of stock options. Bank of America qualifies for that, and so I invest all my money in Bank of America here. And I have 400 shares of Bank of America. That's about like $9,000 of my money, almost $10,000 of my money, of my 13,820 whatever dollars. And I'm getting pretty close to that $14,000 threshold. And I'll tell you what, if Bank of America goes up and it continues to go up, or even if it stays flat, I think in the next couple weeks, this is going to get to that $14,000 threshold, and that would be pretty cool. That would mean that I have a very nice 15% return for the year, I think. So I'm doing pretty good, and so I'm pretty happy with the way things are going. My mind is still set that Bank of America is a good one, as long as the market conditions stay the same. So that's it for this video. Thank you for watching. Any questions or comments, leave them down there in the comment section, and I will see you in the next video.